Let's get you now to Wall Street. This is history that you're witnessing right now. The Dow Jones Industrial Average has crossed the 20,000 point mark. It was up as high as 105, and it's pulling back a bit. We may actually see it dip below. It might just dip below 20 right now.
And it's been flirting with this for weeks now, I feel, right?
It indeed has been. And the stock market has been strong for the last couple of years. Many people believing that around this time it was going to hit the 20,000 mark. And there you see it. This is the first time in the Dow's history that it has crossed into the 20,000 mark, showing just how strong the stock market has been over the last couple of years.
Yeah, we're certainly going to have more on this in a moment. There's a lot to talk about, and whether or not this has something to do with the election. I'm certainly sure that the Trump administration would probably like to take a little bit of credit for it, because we did notice an upswing after the election.
Absolutely. Although interest rates have been historically low, that has helped fuel the rise in the stock market over the last couple of years. But yes, the fact is that when President Trump was elected, I mean, that very night we were all working, right? We saw the next morning after the election, the Dow start to climb, because many people felt that Donald Trump, the presidency of Donald Trump, would be favorable to some of these businesses. And so the Dow started to climb, and it's been climbing steadily ever since. Certainly, the meetings that he's just recently had this week with business leaders, again, just gives confidence to people investing in the stock market that he will be a business-friendly president. Now, whether that ends up being true or not, we'll have to see. But right now, that is the sentiment that many people feel on Wall Street, although it's something that we've been pointing out throughout the course of the start of this year, which is it's going to be difficult, because on one hand, the market feels comfortable with the Trump presidency, as evidenced by the strong performances just recently. On the other, when the president tweets at a company, that can send a stock of that particular company that he tweets about plummeting. And so you pointed out earlier, Anne-Marie, that a lot of CEOs, or at least their PR departments, are going to have to get hip real quick to how to perhaps use Twitter more than just more than just promoting their products or promoting the company.
Yahoo finance columnist Rick Newman joins us now. He's been watching the stocks from the Yahoo newsroom here in New York City. So your take on it? We've finally broken that barrier here.
It's about time. We've been waiting for this for about a month. I mean, we saw the Trump rally that came after Election Day, but that stalled in mid-December. We were looking at, we actually got to 19,999 on one day, and then we went back down a couple hundred points. So not much has actually been happening for a couple of weeks, and I think finally, it is a little bit of a continuation of the Trump rally, but we're also in the middle of earnings season, and earnings are coming in pretty strong. Earnings are looking pretty good, and we got some good news out of Europe overnight. So that is basically what's pushing it over 20,000. We're actually getting back to kind of fundamentals of the economy and actual corporate earnings.
Rick, we've been talking about the effect that the election of Donald Trump has had on the market in terms of forward-looking earnings and expectations of some companies, but we don't want to get too ahead of ourselves. I mean, the Dow has been performing strongly for the last couple of years, given the interest rate environment. Give us a little sense of that.
Yeah, well, we are in a transition from what really drove the markets for about the first 5 or 6 years of this, what is really now an 8-year rally. At the beginning, that was all central bank policy. That was quantitative easing, monetary stimulus, if you will, things the Federal Reserve was doing. And now that the Fed has stopped that and is actually beginning to raise interest rates, we are transitioning into, the economy needs to live on its own at this point, and that's what we're getting into. Obviously, there's a Trump bump here. A lot of that has been baked in, though, since about the first 3 or 4 weeks after the election. That's the anticipation of tax cuts, which would stimulate the economy, infrastructure spending, which would stimulate the economy. So we know about the plans. Now the question is all, what's actually going to happen? And I think we're definitely going to see, this is a nice milestone to hit 20,000, but we are going to see some jitters for sure over the next 12 months. As things look like they might happen in Congress, look like they might not happen, might not be as much as Trump promised, and so on. So, enjoy this while it lasts.
So, Rick, I always ask you this question. Okay, so that's what's happening on Wall Street, but what about Main Street? What about a regular person like me? I got a 401k. I don't play the stock market. Should I care? Should I run and look at my 401k and gloat? What should I be thinking right now?
The best advice always is don't touch your 401k as long as you have a a thoughtful way to invest your money, and you're investing for the right time horizon. However, I would say, you know what, go and look at your 401k today and enjoy it. It's a feel-good day. you made a little bit of money, but no investor, no ordinary investor should ever be reacting to what happens in a given day. I think you always want to rebalance. You want to make sure you are spread out the right way, diversified the right way. There are a lot of things happening with the Trump economy that people ought to be paying attention to. Nobody should go be making big bets on anything, but pay attention to what Trump says he's going to do and what the market is reacting to.
Yeah, that's good advice, Rick. I think a lot of investors, smaller investors, not institutional investors, will see the strong performance of the Dow and think, well, this is a good opportunity for me to buy into the market, when generally most financial advisors would say, look, you pointed out, Rick, to rebalance your portfolio and perhaps look at some of those stocks, some of those industries that are not performing as well as some others, right, and perhaps look into buying those. But it's hard for an investor to buy something that's going down when everything else seems to be going up.
Right.
And that's a mistake small investors make all the time. They put money into asset stocks or other assets when they're high, and then they take their money out when it's low. And of course, the smartest investors do the opposite, which is why you just should not be investing based on trends. Because, if you're at home watching this broadcast or reading the news, guess what? You're getting the news after the smart money has already invested. So you're coming behind. Just follow what the pros say, diversify smartly, and don't make risky bets one way or another.
All right, Rick Newman, thank you so much, Rick. Appreciate it.
Sure thing.